On tonight's Focal Point, do what it takes. World leaders today putting pressure on Europe to stave off a financial debt crisis that will rattle the entire globe. Our Monday Money panel is in to tell us where to hide our savings from the turmoil. Jane Alm is an investment advisor with Angus Watt Advisory and National Bank Financial. Russ Ratwa is a senior financial advisor with Canaccord Wealth Management. And Shafik Hirani is a senior director with Investors Group Calgary. Good evening, everyone.
Good evening.
Hello.
European governments drowning in debt. Greece may not be able to operate next month. Eurozone banks in danger of freezing up lending as a result. The threat of fiscal turmoil there could make RRSP statements here very bleak for months to come, not to mention our exports and jobs. Russ, start us off with where to keep our savings safe.
Well, you said months to come. I think that would be a gift if it was only months to come. Europe is like Canada without a federal government. You got all these premiers, every different agenda. So the only safe place I'm finding right now are bonds, debentures, high-quality dividend-paying companies. But there's been such a rush to these dividend companies. People have this fail-safe that it's safe, this attitude. And you have to be very careful and understand the payout ratios of these companies, because when that money exits those dividend-paying stocks, be they trusts, REITs, it's going to be a herd, and so the stock will go down accordingly. So you really have to make sure you understand what you're getting into, especially if it's dividend-orientated right now.
Shafik, how are you advising clients?
I'm going to take Russ's comments one step further. I'm advising all my clients to stay away from Europe, as we've been talking about over the last 6 months, and I still think the tumultuous situation there is going to get a lot worse. I'm staying a little bit higher into the fixed income and the dividend yielding portfolios, mostly the large cap Canadian financial sector, which is the Canadian banks. And on the fixed income side, you want to stick a little bit more towards corporate bonds over government bonds, because government bonds have very long terms to maturity, and when rates eventually go up, they're going to get hit the worst. So that's sort of the fixed income side.
Jane, do you like either of those pieces of advice? Do you have your own?
I like both those pieces of advice. Just to take Shafik's a little bit further is on the corporate bonds. Remember to watch your quality, because you want to be in corporates, absolutely, because the yields are better than the government bonds, but you don't want to go too low in quality. You might get more yield, but remember that your yield and your risk are directly related. If your yield is higher, that means you're taking on more risk. So make sure you're comfortable, and you're comfortable that whatever company you're buying a debenture from, that they have the ability to not only pay the interest payments, but repay you in cash. Many of the debentures that exist out there are debentures that can be repaid in stock. You may or may not want that, so understand what you're buying.
It sounds like all of you are talking about something a little bit more custom than a mutual fund. Russ, is it down to the point where you've got to buy individual investment assets one by one?
Quite the contrary. I mean, there might be a point where you want to take out some individual corporate risk. ETFs would be an example. I mean, you have to be cognizant of the management fee. I know there's resource mutual funds out there that pay a 5% management fee that are not paying dividends in this environment. I mean, they could really hurt your account dramatically. So the fees are fine as long as it's all relative to the return you're getting and the quality of the product.
You've got a newsletter out this week that says put your money in cash or gold right now until Europe settles down.
I'm encouraging 10-20% in cash, and then I have those clients that believe with the amount of money being printed that gold and silver will be around again in the next century. So 10-20% there, especially silver coming off from nearly $50 an ounce down to 22. Some are using it as an opportunity, but again, it doesn't pay a dividend. It's not for your risk-averse clients. It's more for somebody that kind of speculating. And
you look like you want to jump in.
Well, and I was going to say exactly that when you're looking at gold, you're looking at silver, even when you're looking at cash is only paying about 1.2% right now, so you're falling behind inflation. So you don't mind being there for a short term if you think things are going to be really rough, but you don't want to be there for a long term because you'll just fall further behind.
Well, let's talk about how long, because Shafik, when Russ started us off, he said this is going to be months. What's your thoughts on how long it could take before Europe is messing with world markets?
Yeah, Russ said that we'd be lucky if this ends in the next, 3 to 6 months. Eventually what's going to happen is this too shall pass. And the real concern I have is sort of in the investment industry, it's sort of what's on the horizon that we don't see. Because there's always going to be something, and there's always going to be something that fuels our concerns and our fears. I think that the situation itself is going to take at least 2 to 3 years to work out of budget deficits, fiscal responsibility, sovereign debt issues. But I think during those 2 to 3 years, there's going to be other stuff like tensions in the Middle East. The U.S., remember, is at $15 trillion in debt, and GDP, as a result of this, is going to be down, and there are also political tensions across the world. So there's a lot to be sort of fearsome of, but throughout all that, the markets still tend to do well. So this could be a good opportunity for investors with additional cash to buy into some of the equity markets.
And we would be saying, you know, like, watch for those opportunities to buy. Watch your valuations, because you don't want to be paying up for a stock and chasing something that's already risen for 6 or 8 months. You know, to Shafik's point, what always gets us is what we're not looking for, not the things that we're watching. And one of the things that's happened this weekend that absolutely no one is talking about is the Muslim Brotherhood won the election in Egypt.
What will that do?
We don't know, but we know that they are going to take a very, very different approach than the last Egyptian government, and it could cause a lot of problems with Israel.
Just to go back to the government and back to Europe for a moment, Russ, it's amazing when you look at these leaders. We hear from planners and our own government all the time, don't spend money you don't have, manage your household debt. European leaders are spending money they don't have, to the point where countries are on the brink of financial collapse. Today, Prime Minister Stephen Harper at the G20 summit is saying to the European Union, get your house in order, do what Canada did years ago. And the president of the union is shooting back, saying, we don't need your help, Canada, butt out. It's bizarre to think that you have these world leaders that just are not taking action. What do they need to do that the markets are looking for that they're not doing?
Well, the system's flawed when you talk about politicians generating a profit. I mean, the first and ultimate thing is to be in office to be able to do something about this. We all know what we have to do on a personal nature when there's issues with debt. It's get a lower interest rate, pay it off, or if I'm not in a position to do that, write it off. The hard steps. The hard steps. Who is going to say, by all means, Greece, we don't want the money? And then, so what the government's got to be doing is doing something to generate economy, whether it's employment. I mean, Spain's unemployment rate's 25%. I think it's 50% for those around 25 years of age. So Harper was also pretty ecstatic last week with that new bridge announcement between Windsor and Detroit. I mean, that's going to generate revenue for that really hurt area in southern Ontario. So anything that could generate, you know, be it, I don't want to get into this, the arena in Edmonton, that's going to generate employment or generate revenue, those are opportunities for the government to get involved. But other than that, it's writing off debt, getting that interest rate down, or generating growth. How are you going to do that?
A lot of pressure coming from the G20 nations today. We'll see what happens. Next up, what are Europe's problems doing to the price of oil for Albertans? What else are our money panelists watching? And a long lull, why it may be a good time to get into Alberta's other real estate market. All that when the Monday Money Panel returns here on Alberta Primetime. Welcome back to Alberta Primetime and the Monday Money Panel. We're about to wade into Alberta's recreational property market, but first, we've just heard where to keep your savings safe from Europe's troubles. Shafik, what is the crisis in Europe or other factors doing right now to the price of oil this week and perhaps long term?
Yeah, you know, over the last little while, you've seen oil inventory levels up, and oil inventory numbers are going to be released on Thursday, and what happens is when European GDP goes down, there's less demand for a product, and if there's higher unemployment and less demand, the demand for oil reduces, and when the demand for oil reduces and the supply of oil is up, that causes prices to go down, and that's what we've been seeing over the last little while. We've talked about it in the past. $109 a barrel, now it's trading at $84, $85 a barrel. And if the GDP continues to go down, you could even see lower oil. I know we're in Alberta, and this is very bad for us, and a lot of people think that oil's going to go through the roof. But there is some concerns, at least on our behalf, that oil could continue to slide a little bit. Especially when we're going to be getting those U.S. inventory numbers very shortly for May. We'll see what they have to say, whether stockpiles are indeed high, as you hinted at there. Jane, what else besides Europe and oil are you watching? Watching the Federal Reserve. We have a Federal Reserve meeting starting tomorrow in the States. There's Ben Bernanke and friends. They'll be making an announcement on Wednesday. There's some analysts that are believing that they could do a quantitative easing 3. Mr. Bernanke has said he's got to weigh cost benefits. What is that in plain English for people? A quantitative easing is where they stimulate the economy more to get the U.S. economy to grow. What Mr. Bernanke and the other members of the Fed are trying to figure out is,
if they do this, what's the amount of benefit versus the amount of cost? The same as we might do with anything that we're looking at doing ourselves.
We'll watch for that. Shafik, you've got a few other items on your radar as well.
Yeah. You know, on top of the Greek election in Canada, we have GDP numbers out on Friday. Also, inflation numbers are out. And inflation numbers are important because after Bernanke gives his speech on Thursday at the Federal Open Market Operations Committee, that'll give a good indication of whether Canadian inflation will be up. And if Canadian inflation is up, then Mark Carney himself is giving a speech about interest rates the next day, and that'll gauge which way the Canadian dollar is going to go.
Our own Bank of Canada governor. Russ, if the markets and all this financial stuff is not alluring to Alberta investors, a lakefront property at Sylvan Lake has now dropped from $1.25 million in 2009 to about $750,000 right now. Some Albertans may be considering that if they've got some money, perhaps an investment. Is it an investment or just a recreation choice?
To me, an investment is what income is it generating you, or is it going to be an appreciated value when you dispose of it? More times than not, it's just for recreation, passed down from family to family.
And costs money to run.
Very much so. And here's the caution is you have to sit back sometimes and dumb it down. I always have to dumb it down for me and understand demographics. These recreational properties moved up with the baby boomers when they had kids. If you're retired and you're 70 years of age, do you really want to maintain your home and a recreational property? The retirees are moving more south and eliminating and reducing their workload. So you have the kids with their children, and that is such a niche marketplace. The young adults cannot even afford their own personal home right now. So it's such a niche market. Be very careful about demographics.
Jane?
And I would agree with all of that, because when you're buying a recreational property, whether it be in Alberta or in Phoenix, you need to understand all the costs involved. You also need to look at this as something for your personal use. So you can't expect that you're going to be renting it, and you can't ever anticipate that you're going to be selling it at a profit or when. So if those are all important questions to you.
Those are a lot harder to accomplish than they sound.
You do it for fun.
Very much. You do it for fun and the enjoyment you're going to get out of using it each and every weekend or a couple weeks a year or however much you're going to use it, but you don't look at it as a way to generate a cash flow necessarily.
Shafik, what's your take on that market over the next couple of years? Will it probably remain flat in your view, or will a perhaps solid economy as well as population growth in Alberta prop it up a little bit more? Because there's not only potential buyers, there's potential sellers wondering what to do.
You're right, Jennifer. You know, this vacation market is the leading economic indicator for an economy, for a province, way more than actual residential sales in real estate. So it's really good to keep an eye on it. You know, as an investor, if I'm going to buy something, like Russ said, they're not investments. I mean, if you rent a place out, you can write off the interest on your taxes. You can generate an income from it. If you're buying a rental property, it's just for the enjoyment. Okay. But the problem is, for $500,000, I can go on a lot of vacations just off the interest. So they're not the best investments.
Thank you for all of your advice and insight tonight. Jane Alm is an investment advisor with Angus Watt Advisory and National Bank Financial. Russ Stratton is a senior financial advisor with Canaccord Wealth Management, and Shafik Hirani, a senior director with Investors Group Calgary.